Promised I would wait for you, but I'm getting so impatient. Tell me that you're ready now. This room is big enough for two.
Hey guys, Omar here, broker and CEO of Alden Mortgage and Ome Realty. So let's talk about the mortgaging process. What to expect, how is it going, 2022, what are the pitfalls, and where you're gonna go. Now, majority of the mortgaging process is very heavily depicted on exactly the mortgage product that you went ahead and chose, like whether you have an FHA or you have a conventional DSCR loan, bank statement, gig qualifier, foreign national, or just whatever mortgage product go. But for the sake of this argument, we're just going to go down the conventional route. So whenever you are starting your mortgaging process, okay, in the initial stages of getting pre-approved, because that's what you want. You don't want a pre-qualification, because pre-qualifications don't mean anything. You want to get what's called a pre-approval, okay? So in the beginning, you're going to go ahead and fill out what's called a 1003. A 1003 in whatever company that you decide to. If you want to go ahead and use me here in the state of California or in 38 other states, as far as investment loans, we do DSCR loans in other states, but in the state of California, if you need help, link in the description below. We'd be more than happy to assist you in any one of your mortgaging needs. But you're going to go ahead and fill out what's called a 1003. Now, the documents that you're going to go ahead and supply us is going to be 2 months worth of your bank statements, the last two pay stubs that shows your year to date. You're going to do the last 2 years of your tax returns. You're going to go ahead and give us any type of investment portfolios that we have in order for us to qualify you as far as reserves go. Reserves is just something that you're going to need in your bank account in addition to whatever we're trying to qualify you as far as your mortgage down payment goes. Then after we get all of that in, we're good to go. We could go ahead and run it through something that's called AUS, which is that is called automated underwriting system. Now, the automated underwriting system just goes ahead and makes sure that everything that was inputted in the 1003 fits into the criteria of whether we're selling it to Fannie Mae or Freddie Mac, whoever it is, right? So after we go ahead and do that and we get an approved eligible on your product, then we have to go ahead and on our end, on my end, we have to go ahead and make sure that the story that we are selling, the wholesaler, makes sense so there's no confusion. Nobody is getting confused about what we're trying to sell, what story we're trying to tell, because we're telling a financial story, right? We're trying to say, okay, this person has worked at this job for this long, and then from there we go ahead and tell them, okay, their credit is from here to here because of this reason. Like, let's say, for instance, I'll talk about the last mortgage application that I did. The last mortgage application I did, there was an inquiry on an Old Navy credit card. Why in God's name would you go ahead and apply for an Old Navy credit card? Especially if you're gonna go ahead and refinance. Well, you know, you walk into the front of the counter, they say, you know what, you could get an extra 20% off if you apply for our credit card and this and that. Don't do that. Listen, in the time that you are gonna go ahead and purchase a home, refinance a home, or anything that has to do with a mortgage, do not obtain any new credit. Don't sit there and try to go buy furniture. Don't go try to buy like a bunch of other things that is gonna go ahead and show an inconsistency in your credit, in your bank statements, that we have to go ahead and explain. Because if we do have some of those, then in the midst of the whole loan process, in the midst of the whole in your application process, we have to go ahead and explain why that happened. Why did this person go ahead and buy a Cadillac for no reason whatsoever? Well, they needed a car. Well, why did they want to go ahead and do that right now? Because then that increases your debt to income. So we need to make sure that no new credit is obtained. So after we go ahead and do that, we go ahead and pre-underwrite your package on my end. So what I'm going to do is I'm going to go ahead and take a look at everything. I'm going to make sure there's nothing to explain. And if there is something to explain, I already have it locked and loaded with something that's called a letter of explanation to go ahead and explain why that happened, so that doesn't hit us at the end. If we need to pay anything off, like let's say you went ahead and bought, like let's say to keep that Old Navy thing going, if you went and bought like $80 worth of Old Navy, well, I'm gonna have you pay that thing off. You have to pay that $80 off because we don't want to see, you know, that extra $25 payment that you're gonna be making. It's ridiculous, it's stupid. You don't need to do that. So please don't do that. So after we go ahead and I go ahead and pre-underwrite it, which means that I'm gonna look over everything. I'm gonna make sure everything is good to go, and then once I do that, then I'm gonna go ahead and write whatever letters of explanation that I need to do. I'm gonna have you sign them. Then after that is all done, that's when we're gonna go ahead and submit your loan. Once we submit your loan, then we're gonna go ahead and send out something that's called a loan estimate. A loan estimate, which I'm gonna probably have you DocuSign. We're gonna email it to you. You're gonna have a little link, and this is gonna give you your total cost on the loan. Your total cost on the loan is gonna say what interest rate that we're at, your payment, the total loan amount that we're gonna have, all the associated costs to it. And then once you sign all of that, then we have to go ahead and wait for you to sign something that's called an ITP. ITP is just short for intent to proceed. This will allow us to go ahead and proceed with the mortgage application. Then once you go ahead and sign all those documents, then we go ahead and send it to the underwriter. And hopefully, if we did our job correctly, we could go ahead and get something that is called a conditional approval. And if we're doing a refinance, and you have enough equity in the house, and we did everything that we were supposed to do, and your loan to value looks way too good to go ahead and give us what's called a appraisal waiver. If we get an appraisal waiver, then we don't even have to do a conditional approval. Then what we do is we just go straight into the clear to close. Those are the best things. 0-day approval, clear to close. Those are the best, which in essence, we could actually have you close within a week and a half. A week and a half is ideal. But for instance, if you did have to go out and get an appraisal, then once we get all of our documents, then the underwriter is going to give us what's called a conditions list. A conditions list is going to say, okay, I need this still explained, I still need this, I still need this. So in the process of all of this, if we don't need a VOR, which is a verification of rent, if we don't need a VOM, which is a verification of mortgage, if we don't need a verification of employment, which is a VOE, if we don't need a lot of this other stuff that comes associated with it that is not required, then what we'll do is we'll just go ahead and submit it in. But if we do require all of that, then what we do is in the midst of doing all this application, as soon as we get your pre-approval and you sign all of the initial disclosures that we need you to sign, then we'll go ahead and order all your verifications. We will go ahead and verify all of that through a third-party company, because of course we are not allowed to go ahead and verify any of that stuff. We get yourself a conditional report. Now we just have to wait for those verifications to come. We have to wait for the appraisal to come. Appraisal is one of those things that has just been a pain in the ass for the past 2 years, and it's, the workload on appraisers have been crazy, so it is what it is. Once we're done with all of that, then we go ahead and just wait for that little appraisal to come in. Appraisal comes in, then you get a clear to close. Then we go ahead and pre-populate our closing disclosures. We go ahead and get everything all dialed in. You sign your closing disclosures, and then we go ahead and collaborate with your settlement agent. Now the settlement agent is going to be with your title and escrow company. If you don't choose a title and escrow company and you're like, hey Omar, go ahead and choose whatever title escrow company that you want to go ahead and choose. I usually go with like Chicago Title, or I'll go with like, Old Republic. I already have pre-negotiated rates with them, so it kind of works out. They're not that expensive. Sometimes it does go a little bit above when you don't have people that you want to negotiate. And by all means, just know, you do not have to use title and escrow with anybody that you choose. If a lender says you have to use this title and escrow, they're lying. You don't have to. You have the ability to shop around with whomever you want, just like you were able to shop around with a broker like myself, a direct lender like your Bank of America's, or your, a depository institution, with whomever you'd like to. But we had, let's go ahead and get on with, so you get your clear to close. You get your clear to close, we go ahead and go with your settlement agent, we go ahead and collaborate. Collaborating just means like, okay, we have to go ahead and close by this way. So now there's a 4-day waiting period. Now those are 4 business days. So if we get a clear to close and we get your closing disclosure signed on a Wednesday, that means that we would have to wait until the following Monday. Then we could go ahead and set up a signing. Now in California, I don't know how it is in your state, but I'm just going to go ahead and say in California, we have to have something that's called a wet signature. So even though electronically we're able to do everything before, when you get your final document signed, it would have to be a wet signature. So what I'm going to go ahead and do is get a notary public. Notary public is going to come to your house. They're going to go ahead and get the wet signatures on all of those. And once they're signed those wet signatures, then we go ahead and have a 4-day waiting period until funding. Once again, this is going to be excluding holidays, business days only. We already closed, everything is done, so this is going to be one of the stages of the closing. First, you're going to have your clear to close with the wholesaler, with the lender, or with whoever we're selling the loan to. Then from there, we have another close when we send out your closing disclosures. Now we have a closing with the title company. Title and escrow, they have all the wiring instructions. That's the escrow company. You know, everybody is all happy, hunky-dory, and then we go ahead and just wait till the funding. And that's it. Pretty much self-explanatory. There are a few things here and there that change with different types of loan programs, whether we need one appraisal or we need two appraisals, this and that. A lot of investment properties will typically need two appraisals, but that in the essence of loan processing and loans, that's exactly what it is. So if you like the content, like, subscribe, comment. Up to 50% commission rebate on purchasing your next home, 0% listing fee or any mortgaging assistant. Link in the description below. Let me beat your big bank. Until next video, guys, thank you for watching. Hit that little ring bell notification and see next one that we're gonna go ahead and next video that we're gonna go ahead and pop up. And until next time, guys, thank you for watching. Appreciate you.
I promised I would wait for you, but I'm getting so impatient. Tell me that you're ready now. This room is big enough for